Bitcoin positions, the media. Now you've got Bloomberg covering crypto, you've got CNBC covering crypto, you've got an entire world, media, analysts, politicians, financiers, and they're all starting to figure this out.
Hey guys, welcome back to Library of Wealth. In a recent interview, Saylor discusses his thoughts on the ongoing U.S. banking crisis and the impact on Bitcoin and the wider crypto ecosystem. He believes the Bitcoin rally is not merely a reflection of mainstream adoption. Instead, it is existing cryptocurrency investors reluctantly acknowledging the place of the leading crypto asset in the ecosystem. Despite recent price gains, Saylor believes that the greater rally from mainstream investors is yet to come. He predicts that 2023 will be the year we see Bitcoin explode. The former CEO and co-founder of MicroStrategy has emerged as one of the most passionate and vocal champions of the world's leading cryptocurrency asset. His company boasts an impressive holding of 140,000 Bitcoin, making it the world's largest publicly traded Bitcoin holder. While some investors were initially uninterested in Bitcoin and gravitated toward other cryptocurrencies, the recent events of the past year have caused a massive influx of investors to return to the dominant crypto asset. Let's get right into the latest interview with Michael Saylor. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Bitcoin is up 65%. MicroStrategy stock, and MicroStrategy's bought almost $4 billion, not quite, but nearly $4 billion of Bitcoin. MicroStrategy stock is up 66%. So we are tracking slightly ahead of Bitcoin. The S&P is up 14%. The NASDAQ is up 4%. Whoa, 4%. All of big tech is up 4%. Gold is down 18%. And, bonds, the ultra-safe bonds, long-term bonds, down 18%. So in terms of asset classes, the crazy volatile Bitcoin is the best performing of all those major assets. To be clear, I still think we're very early, but that phrase, decades when nothing happens and, weeks when decades happen, it really refers to paradigm shifts. And if you think about the paradigm shift when automobiles arrived, there's the famous snapshot in New York City where, there's just a bunch of horse and buggies. And 10 years later, it's all cars. And in that 10 years, you adopted it. And I remember, standing once on the Pantheon and, or on the Acropolis, and I'm like taking a photo and about to post it. And I think to myself, what's different about this? And I think, well, last time I was here, maybe a decade ago, I had no smartphone, I had no iPhone, there was no Facebook, there was no Instagram, you couldn't post it. There were no, digital photography didn't exist. So a decade goes by and you're like, you're trying to remember, you remember back in college, I went to college, we didn't have laptops. You fast forward another decade, they've got YouTube and simulations, and now you're starting to question whether or not you even needed to go to college at all. Maybe you could have just sat at home. So every decade, there's some profound paradigm shift. And the thing that hits you about a paradigm shift is it's such an out-of-the-blue idea that no one can conceive of why you would even want it. And in 2020, the monetary inflation rate tripled in the US. And what we saw was in the world's best economies, you're losing 15 to 20% of your economic value in the currency every year. In the second-tier economies, you're losing 30% or more. Like the Japanese yen is down 24% against the dollar in the last 12 months, right? And in the tertiary economies, you're losing 50, 60, 70% of the value in the currency. Would you have guessed that a mid-sized software company, low-growth mid-sized software company nobody ever heard of, would outperform Google in the last 2 years by a factor of 2? So last point I make, we compete against companies 100 times as big as us. Oracle, 100 times bigger than us. They're up 25%, IBM's up 3%, Salesforce is down 23%, SAP's down 47%. So what is the lesson of that? The lesson is we're in the middle of chaos. There is no place to hide. Your choice is, are you going to buy S&P index stocks? Are you going to buy Bitcoin? Are you going to buy art? So there were conventional answers to all these questions, Brian, and they kind of worked for, there was an answer to this question before 1914. There was an answer to this question between Bretton Woods and 1971. There was an answer to this question from 1971 till the year 2020. In 2020, it's like, oh, the answer, 60-40 bond portfolio, buy the S&P index and like a portfolio of diversified bonds and you're good. Okay, there was an answer. The answer kind of got confusing after 2020. The answer got confusing for a lot of businesses, for a lot of people. And so highlight of the year? The highlight of the year is people were stunned from March of 2020 to March of 2021. And from March of 21 through the middle of 2022, they're all starting to get their bearings. And they're like, well, I guess, what is Bitcoin, a digital commodity? Do I have to deal with that? Well, now Fidelity's talking about rolling out the 34 million retail accounts. You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC getting educated on it. Big institutional investors starting to take Bitcoin positions. The media. Now you've got Bloomberg covering crypto. You've got CNBC covering crypto. You've got an entire world, media, analysts, politicians, financiers, and they're all starting to figure this out. But I still say we're early, right? This paradigm shift takes a decade. And maybe the first decade was the embers of a flame flickering from 2009 to 2020. And then from 2020, we started pouring gasoline on that flame, right? The gasoline in the US is we tripled the inflation rate. We probably need to look at some new ideas because the old ideas just don't work anymore. And there's no intellectually honest person that would say, yeah, everything I believed in 2019 or 2018, it's all still true. I haven't changed any of my opinions about anything. I mean, everybody's had a place in their life where they've been jarred and stunned, and now they're trying to make sense of it. So the question is, how do we move forward? And, to summarize on Bitcoin, I think Bitcoin is it's very volatile. It's getting jerked around.
Saylor believes in the long-term potential of Bitcoin as an investment, despite the current scrutiny of crypto by the SEC. He says those with crypto assets are likely to trade them for Bitcoin anyways, which is seen as the most trustworthy crypto asset and network. Saylor notes that Bitcoin has been moving up about 50% a year on average over the last 3 years, and the key to investing in Bitcoin is to be able to hold on to it and stomach the volatility. Saylor remains bullish on Bitcoin and echoes the sentiment of many high-profile investors, saying that the crash of the US dollar will lead to a rally in Bitcoin. Saylor suggests investing in scarce, profitable assets that are free from counterparty risk. He notes that the global demand for a stable digital currency is growing as countries are facing currency instability. According to Saylor, while strong nation-states may still have fiat currencies, the currencies of most countries will eventually fail. He advises against holding cash that rapidly loses 20% of its value per year and believes that maintaining generational wealth requires purchasing desirable assets with low-cost money and holding on to them forever. What do you think about the latest interview with Michael Saylor? And when will we see the massive rally in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.